Hello, I'm Lelda Smits for Australia's Finance News Network, and joining me today is Marc Faber, author of the Gloom, Boom and Doom report. Marc, thank you for joining us from Thailand.
It's my pleasure.
Now, last time we spoke at the end of 2012, you slammed global stimulus policies. In your view, has the situation improved or deteriorated over the past year?
Well, that depends for whom. Basically, we have an economy that is very imbalanced, a global economy that is very imbalanced. The rich have benefited a lot from the stimulus packages, both fiscal policies and monetary policies, whereas the average household hasn't done particularly well. And there is now a meaningful slowdown in emerging economies.
You mentioned emerging markets. They have also felt the force of the Fed's decision to withdraw stimulus. What is the risk of more downside, and which economies do you think face the biggest threat?
Well, the economies with the largest downside are countries like South Africa, Brazil, and Turkey. But we could have a contagion, and then other emerging economies, currencies could also weaken.
Okay, well, which countries do you think are currently the most economically stable, and which are really at threat of danger ahead?
Yes, you're asking which country is the least ugly.
Potentially, yes.
Basically, we have instability everywhere.
So there are no bright spots for you?
Well, in terms of investments, the Vietnamese stock market has had a very rough time between 2006 and last year. And we've bottomed out both economically and also in terms of asset prices, real estate and stocks. So I think that some money will be made in Vietnamese shares.
So will you be putting your money into Vietnam?
Yes, we have already investments in Vietnam, both in real estate and in equities.
If we can look at more of your investment advice, last time we spoke, you said the best performing asset class will probably be real estate and precious metals. Since then, gold sank about 30% over last year, while home prices have continued to rise to elevated levels around the world. How have your views changed over the past year?
Well, the problem with money printing is that it doesn't lift all assets at the same time. So yes, we had a substantial gain in home prices in most countries, and I think that real estate is now worldwide at an elevated level, with few exceptions. But say in the US and in Australia, we're at very high levels.
So
gold has had a significant correction, and I think that we just bottomed out in the price of gold and in gold share.
And how have you changed your exposure to both over the past year?
Well, I have increased some real estate exposure in places where prices are low, say in Thailand and in Vietnam. On the other hand, I have reduced, say, my exposure to home builders in the United States, and I have recently increased my exposure to gold and gold share.
Okay, and now your recent analysis has recommended 10-year treasuries for a short-term trade. What's the rationale behind this recommendation when US interest rates are sitting so low?
I think that there is a chance that when equity markets sell off, there will be a flight into quality, away from risk, and that treasuries could benefit. So I'm buying essentially 10-year treasuries, or I've bought them when the yield was around 3%, in the belief that if stock markets go down, they will rally. And secondly, if the yield on the 10-year treasury should rise to, say, 4.5%, I think it would knock off stock markets.
Now, Marc, you have also predicted equity markets are overdue for a correction of between 20 to 30%. Over what time frame are you expecting this to play out?
Well, I think this year will probably have a market correction that is more meaningful in the US. We already had this 20 to 30% corrections in emerging economies, stock markets, but it hasn't happened yet in the U.S. So what you have is essentially the U.S. marching up and emerging markets marching down, and I think a significant adjustment in the U.S. is likely to start this year.
Okay, and finally, Marc, you have previously said we're in a gigantic financial asset bubble. What signs will you be looking at to indicate that the bubble may be about to burst?
Well, that is the tricky part of bubbles. They can get bigger before they burst, and it's never crystal clear that they will burst. But according to William White, who was at the BIS before, total credit in the world today as a percent of world's GDP is now 30% higher than it was in 2007 when the last crisis occurred because of excessive credit. So I think that the global economy is extremely vulnerable as credit growth may slow down.
Okay, well, Marc Faber, thank you as always for your insights today.
Well, thank you very much for having me.